What's going on, guys? Julian here, jlewistrading.com, doing a quick review on some of the swing trade alerts that we put out. We're going to start off with this S&P 500 ETF SPY. And you know what? We were moving quite nicely. We had that 200-day simple moving average down here, 20-day simple moving average up here. And price action was getting a little disconnected from that 20-day simple moving average. You see that it'll touch right through here. It'll run up a little bit, pull back. Very, very healthy movement. But then it kind of thumped right through here. Gap down, consolidated a little bit. And I was looking at some of these prior levels down through here as potential areas where price action could potentially come back down to. And you can see actually that we just about touched that 320.15 level on the SPY. And I was suggesting that if that level was to get taken out, and there's still a chance, I'm just going to move back to this pivot area and maybe check out this 315 level. Now I know we're getting a little bit to the low sides here on that 315, but you can see that there's two prior levels of resistance that broke out and ran. Resistance in a lot of cases becomes future support. You can see right through here, resistance breaks out, pulls back, now becomes support, runs up, pulls back, and it's becoming support again. Now, is this a double bottom or a triple bottom even? I don't know. We'll look to see. I usually follow structured levels of support and resistance, and then I look at candle ranges and so on and so forth. That's how I kind of determine which way that I'm going to trade the market. So as it stands right now, the way that I'd be looking at the SPY is if 320 broke, price action comes down to this 315 level. If 315 for whatever reason didn't hold, I honestly think that price action could potentially come all the way down to 302, which is right around where the 200-day simple moving average is. Now, a lot of investors, a lot of long-term long traders might say, you know what, it's not going to happen. But the 200-day simple moving average is a key level where price action continuously tests over and over and over again. And we haven't tested it in a while since this level right down through here and right through here. So there's always that opportunity. The price action could potentially at some point pull back all the way to that 200-day simple moving average. And as of right now, if there was a key level, I'd be looking at this double level of resistance right through here that broke out and moved, and it's also running right into that 200-day simple moving average. So 302 could potentially be a pivotal level. Again, am I speculating that price action is going to come down here? Absolutely not. Just making a note of the levels, and then I just make a note of what happens if 315 does actually get taken out. There's not much to catch it until 302. So that's just how I look at these charts. Of course, whatever happens with the charts and price action when it starts printing in the actual markets, then I'll start to determine what I'm doing from there. But that's what we're looking at on the SPY. This was a level that I called a couple weeks ago, I want to say, and price action as of Friday came almost right down to that level. Sticking with the review, we've got AON. And AON, you can see that I put out an alert to our chat room at 312.45. I was looking at this ascending triangle and 20-day simple moving average supports over the 200, and it squeezed beautifully, taking out 212, which is exactly what we said was going to happen. Obviously didn't know where this thing was going to go to, but this ran all the way up to 227 and has since pulled back. The momentum is just building. You might want to move your way down to a lower time frame excuse me, and look for a smaller flag to potentially get long if you want to take advantage of the next move up. I would not be surprised if price action rolled over and held 212 and then started to trend from there. The reason why we picked AON specifically because of the technicals was just because of how this thing trends. 200-day simple moving average holds that 20 beautifully, pulls back, and it's not huge, holds that 200, consolidates beautifully, moves up, pulls back. The 200 is king on AON, and this thing just moved exceptionally well. And so we looked at this thing on a pullback, which is right down through here, and this is where we started to look at that squeeze, and it happened. AON, not a bad trade. AEP was another one that we were looking at, and this you can see actually back through here, it's squeezed, and same setup, 200-day, 20-day price action squeeze. And you can see that it actually popped up just a little bit. We had some support right through here, so that resistance became support. Double top came off, held that 200-day simple moving average, and got long again. Actually, if you look at this previous high right through here, this is where it really started to run and trend nicely. So you would have had to have dealt with a little bit of chop on AEP, but nonetheless, the call that we put out has netted a positive result. Info, INFO, this is another one that we talked about recently. And there's that same price action squeeze, 200-day simple moving average, 20-day simple moving average on top. We had some resistance up at this level right through here. Price action broke out, it held, and then ran from there. And the pattern that we were looking at was an ascending triangle at around $68, $69, and price action moved from there. And that moved up about 10 points, has since pulled back, but is holding that 20-day simple moving average. I would not be surprised if price lost a little short-term strength, came back down to this 75 level, maybe held that previous resistance, creating some structural support, and then ran from there. Again, the reason why we picked info, 100% based on the technicals. Caveat here is that I don't look at any news, I just look at the technicals. And it holds the 200 very, very well, and it holds the 20 exceptionally well. So what you'll see is after a nice price run, price action will come back down, test and hold the 200-day simple moving average. So I don't know that I would suggest this as a long trade right now, as it is getting relatively extended. It is going to have to find time to come back down to that 200-day simple moving average, and at that point, INFO might become a decent long trade. I'm going to get into a short ExxonMobil. Talked about this with one of my students not too long ago. We were looking at some potential short swing trades. We were looking at the overall sector was looking quite soft, and price action on Exxon, when we looked at it, had held that 200-day simple moving average, creating a bit of a double top right through here, almost an approximate triple top. Price action did come down. It rallied a little bit. Wasn't too concerned about a rally underneath the 200-day simple moving average. That's the counter trend trade that I'm actually looking for to position short. And so with a soft trend and trend moving, downwards, 200-day simple moving average is, in my opinion, the best place to pick up a position to short. Now, in the case of Exxon, what I really, really liked is that price action was rallying above that 20-day simple moving average. 200-day was holding it, and we had this nice rising wedge with the lead-in trend being short. So the prevailing trend was bearish, and this was nothing more than a short counter trend trade that was primed to break. We moved down to a smaller time frame, and we saw where the actual snap happened, and this thing just sold from 70 down to $62. A bit of about an 8-point play there. Personal position that I've been long for a while now, Coca-Cola. I've got a decent sized position in Coke. And what I was looking at here, same thing that I'm looking at across the board. Really nice movement, pull back towards that 200-day simple moving average. And when the counter trend trade is showing signs of popping, that's when I'm going to get long. Now, Coke was moving all the way to the upside. And what I actually did, so I didn't miss the opportunity, is I bought a small amount of shares at the top. Now, there's a reason for this. It's to get engaged and invest my focus into the stock. And then what happened is, once I bought at the top and price action started to come off, I really started to watch this stock. And as price action started to pull back, and again, I'm long a couple shares up through here, like literally a small amount of shares just to maintain the focus. As soon as price action started to pull back, I started to buy more long. I'm not going to tell you that I was buying a whole bunch right down through here. I think I probably ended my buying into this position probably closer into this area, $53 around. And then, we had that double bottom just over the 200-day simple moving average, and then the thing popped, and just 2 days ago, Coke beat its expectations, and Street's happy with it. So price action is pushing higher on Coke. So that is the review that we have on some of our swing trades over the last little while. I am going to be delivering a brand new, fresh opportunity list on the swing trade side of things for our members. So if you're a member and you're watching this, please watch out for the new opportunity list that I'm going to be posting later on today. I hope that some of this has helped. If you have any questions, I'm at info@jlewistrading.com.